Good morning. My name is Vladimir Tikamirov. I'm Chief Economist at BCS Global Markets, and I'll give you my outlook in the macro area for the coming week. The week would be quite important in number of aspects, particularly two. One is, of course, the developments on the oil market. On Tuesday, Wednesday, on the 14th and 15th of July, there will be two key meetings within OPEC+. The Technical Committee and Monitoring Committee are going to meet, and the key issue that they're going to discuss will be the future of the OPEC+ deal. The report suggests that there is a number of participants that would like to see either the deal paused, so no more cuts starting from August, or significantly lower cuts to oil production, oil supply from OPEC+. If this news turned to be true, this is of course a negative sign for the oil price. We have seen already oil prices starting to correct last week, and we expect this trend to continue this week as well. If that happens, weaker oil means lower attractiveness of investments in Russian market and the ruble. So ruble would come under increased pressure, although generally I expect ruble to continue trading within 70 to 72 rubles to the dollar band. However, if the deal is stopped, deal from OPEC+ is stopped, then we can see ruble actually even crossing 72 rubles to the dollar and weakening below that level. Another big important factor this week would be the statistical and reporting season. On the statistical side, we are going to see a number of important statistical releases coming out from Russia, US, Europe, China. This refers to industrial production for June, but also to the state of the labor market and the construction dynamic. And of course, this week would be the first week of reporting season for the second quarter from major corporates. There is no surprise that these reports for the second quarter would be quite weak, given the fact that that was the peak of the pandemic and the peak of lockdowns. However, major attention would be actually towards the guidance that the corporates give for the coming future, particularly for the third quarter. This is something that the investors will be watching very closely, and this would can drive the market either way. We have seen a bit of optimism on the market still throughout the past few weeks, so that will be a big test for the optimism, whether it's grounded or not. Another factor that would have an impact on the Russian market is geopolitics. We have seen a significant increase in discussions over new sanctions against Russia, both in the US and Europe. So chances are that geopolitical situation would remain tense for Russia, and that could lead to increased risk of investments in Russian assets and could put additional pressure on the ruble. So the week seems to be quite an important one, both from the statistical reporting and geopolitical side. We'll be watching closely how the things develop. Thank you.